I'm lucky to have a chance to talk for just a few minutes here with the CEO of OnDeck, Noah Breslow. Noah, first of all, thanks for joining me. I'm really glad we were just talking before we went and started recording this. Like, you and I have crossed paths a lot over the years, but we've never actually had a chance to like talk. So this is very cool.
No, thanks so much. Great to be here. And yeah, certainly, Gene, I've followed your columns from afar for many years. And as someone else who's dedicated a lot of time to the small business space and is very passionate about it, it's great to see you in person.
Yeah, I appreciate that. So it is good to talk. So first of all, just a little bit of background before we get into like OnDeck is, so you're what? You're like an engineer by training, right? Like, and not a mechanical engineer, a computer science guy?
Computer programmer. Yeah. So no, I studied engineering in college, went to MIT, and then I've done a series of venture capital backed software companies since. And I hadn't done anything really in financial services, but I met Mitch Jacobs, who was the founder of OnDeck back in 2007. I was looking for my next opportunity and was fortunate enough to become the first employee at OnDeck, and kind of the rest is history. Here we are kind of 14 years later. And still very passionate about working with a small business customer and bringing them better financing solutions with technology.
So what drew you to OnDeck? I mean, what is OnDeck all about? What are the factors that started the business and the initial audience, and what drew you to the company?
Yeah, it's a great question. The driving force for starting the company, back then is still very constant today. It's helping small businesses access financing in a simple, efficient, and user-friendly fashion. And the original thesis of OnDeck was that there was a group of creditworthy small businesses that were just not well served by existing institutions.
Right.
These institutions often looked at the business owner's personal credit score more than the health of the underlying business, or the data about these businesses was messy and hard to obtain. Maybe the business wasn't seeking $1 million loan; they only were seeking $50,000. And so that was one part of the issue. There was an underserved group of businesses out there. And then the other piece was around technology. When we started the business, the iPhone wasn't even a thing yet. Yeah. And so the process to obtain a small business loan at the time was weeks or months of effort. And it was very inefficient for both borrowers and lenders, often ended in a decline. And so we thought that technology could solve both problems. We could use digital data to open up creditworthiness for more and more small businesses. And we could also use technology to solve that efficiency problem and make a decision in minutes and deliver a loan in hours or a day or two.
And I am betting that since you joined the company, the company's been around since 2006, like a lot has changed in the past 14 years. What has changed?
Oh man, look, I think it is a different world with technology. I mean, I think if we only knew then what we do now. I think what we learned a lot over the years. I think the small business owner every year is becoming more savvy with technology, and right. Things that were maybe leaps for them, in the early days of OnDeck are now more commonplace, right? The Amazon economy, the fact that most banks, even digital banking, right? When we started OnDeck, maybe 40% of small business owners checked their bank account online. Today, that number is 98, 99%. So I think the comfort level of our customer with digital technology has gone way up. I think the environment's changed. When we started, there were very few sort of startup companies providing online loans to small businesses, but this industry has really matured and gone mainstream now. So now you see online small business products from a variety of different folks in the market. But I think what stayed the same is these are still customers that really aren't all that well served. That's amazing how little that's changed, actually. And they still value, their time is valuable. Every small business owner values their time at $150 an hour. That's kind of the industry average. If you're a radiologist, that number is even higher, right? And so you value solutions that bring efficiency to your business that let you get back to focusing on what you love. And so some of those things have actually stayed quite the same over the years.
Yeah, it's incredible. I think the same thing when I look back on like just the adoption of the cloud, obviously, in the internet.
For sure.
And you and I have been in the small business space for a number of years, and I was thinking, like, there's no way there's going to be such a slow adoption for business owners to trust, technology companies to house their data and to all that. And I was completely wrong, like many other times, because people, business owners have really adapted to the fact that the cloud provides the ability for companies like yours to help them access data and get financing, right?
Yeah, no, it's I remember in the early days of OnDeck, a lot of what we were marketing, so to speak, was trust. Right. Why should you trust us? You haven't heard of us. We're not, a bank that's been around 100 years. And today, Obviously, we've now been around over a decade, so there is some trust in our brand, which I think didn't exist before. But people trust that online digital process, and they're much more willing to engage in it than they ever were, say 10 years ago. And so that's been a big change in this market over that time.
Okay, so obviously 2020 has been a pretty bad year. The pandemic hits, has a big impact on small businesses. What happened to OnDeck? What happened to loan demand during the period, April, May, March of this year?
Yeah, it's obviously it's been a tragedy for small business, and for those of us that love them and follow them, it's been really just a shame what's happened. You see different numbers out there. 20-30% of businesses may not come back from the pandemic. And so I think, especially when you look at the customer base we serve, which is brick and mortar small businesses, they were especially shocked, right? Some of the businesses that were more online in nature may have even seen a bit of a bump, in this environment. But, the restaurants, the hospitality related businesses, the retail businesses, like those are the ones that were hit the hardest. So, as we got into the end of March, what we saw was a massive uptick in both demand and also customer support activity, because people didn't know what was coming. They just knew something big was coming. So we basically shut down our traditional OnDeck products. We ramped up the PPP program, and we really focused on our existing customers and getting them PPP loans to help them navigate this. And so I would say during April and May, demand for PPP was very high.
Right.
And I would say demand for our traditional products, and that's not just OnDeck, but lots of providers, traditional products was quite low. And as PPP began to slow down as you got into end of May and June, that's when we made the decision to start re-entering the market with our traditional products.
So where are we now, Noah? I mean, we're beginning of September. Tell me what your thoughts are about the recovery and what you're seeing in the marketplace.
So it's been, about 3 months. We re-entered kind of mid-June into the market, and it's taken us some time to get a feel for what's going on out there. It's a very uncertain time. You see different case rates, surging back up in parts of the country, starting to settle down in others. And we almost feel like we're learning to lend again, figuring out what states, what industries are safe to focus on, and also how to appropriately underwrite businesses. If you look at OnDeck's historical underwriting approach, we've been very focused on your recent performance as a business owner. But in this environment, those numbers are almost meaningless, right? They're irrelevant. And so, we've been focused largely on customers we've already worked with in the past, right? Where we have some baseline to compare them to pre-COVID, but we're definitely dipping our toe in the water on new businesses to the platform. And we're now starting to see demand start to pick up a bit. So I would say when we started, there was still so much uncertainty about, what the back to school environment would look like, what the public health environment would look like, what the government stimulus, availability or lack thereof would be in the fall. And now that those things are known, business owners are starting to plan more than just ahead for the next week or the next month. And that's why we're seeing demand start to pick up again, I think.
When people ask me, Noah, hey, how are small businesses in this country doing? It's kind of a hard question to answer. There's 30 million small businesses. At OnDeck, do you break it down by? Certain regions are better than others, and certain industries are better than others. What are your thoughts on that?
Yeah, we completely agree. In our portfolio, we have over 700 different industries. And actually, one of the things we were very strict about from the very beginning of the business was we tagged every single loan with a 6-digit industry code. And we track them, in a very disciplined way. And that allowed us to see, as we looked at our own portfolio, what industries were doing better, what was not doing as well, and then sort of sorting that by geography as well and trying to get a baseline. So, our reentry strategy, I think it's a grid with several 100,000 cells in it, which are sort of the blend of states and industries. Almost think about 35,000, 700 industries times 50 states. Just to think about it roughly.
Yeah.
We have a certain set of safe zones and a certain set of zones where we're lending, but maybe not as aggressively as we did pre-COVID. We're comfortable making an approval, but it's going to be for much more smaller dollars or smaller terms than we did before.
Yeah, you just can't make a blanket statement about that.
That's right.
Earlier you had mentioned about how things have sort of changed. Pre-COVID, you could evaluate potential customers based on their financial statements up to that point in time. And now, obviously, the year that it's been, it's kind of tough to do that. So how, what other changes have you made to your lending practices? How has COVID impacted that? And if I'm looking for a loan from OnDeck, what's going to be different about that process now than 6 months ago?
Yep. Great question. And we grapple with it because obviously the company was founded on this principle of kind of speed and efficiency and leveraging digital. But in the restart, we realized we don't know just as much as we know. And so we leverage actually quite heavily. We have a judgmental underwriting team at OnDeck, and they have always helped us review loans that our algorithms weren't equipped to review, or our larger loans, or loans where we suspected maybe there was some fraud and we wanted to have people do a deeper dive. And so in the restart, we've actually leaned very heavily on the judgmental underwriting team. So
judgmental means actual humans making
actual humans looking. Now the system recommends a decision for everything, but you and I both know that the system, if it relies on data and that data is all over the map, you can't just use that. So I think that's actually why, compared to some others in our sector, we've been able to actually do the restart faster, is because we have that team, and we're not necessarily dependent on just the digital data and what's available kind of out there. But from a process perspective, what I can say is it's not that different than how we were pre-COVID. It's still very fast. It's still very transparent. And you might provide a little bit more financial history to us than you did pre-COVID, and there may be a little bit of time for that additional judgmental review step, but we still can turn around a loan in hours or days, and we're usually as fast as our customers need us to be.
So what do you do now? You've got to sort of change the process a little bit. You're getting humans involved. It can't be all algorithm based, which means it's going to take a little bit more time to do that. So that impacts a user experience. Like if I'm coming to you, I need financing pretty fast, so what are you doing to make sure that the user experience is still as good as it can possibly be?
Yeah, no, look, customer experience is job one for us. It's really the thing we care about almost the most as a company. And so our application to funding time is still quite strong. And actually we took advantage, frankly, of the downtime from an originations perspective to implement some technology solutions to make things more efficient. So while I've added, a judgmental underwriting step that wasn't there before, and we're asking for a bit more information, there's other steps in the process that have actually gotten faster during COVID, because we sort of took advantage of the lower volumes to make some changes to the system that we maybe wouldn't have been able to make so easily in a different environment. So we really still provide the same level of service. Small businesses always have someone supporting them from the time they hit the website until their loan is completed with us. So it's both a high touch and a high tech process. And we strive to make our customer experience both tailored, human, and simple. And I think we've been able to maintain that even in this unprecedented environment.
Have you seen though, like during this whole ordeal, like any slowdown in communications, either coming on your end or even from business? I mean, everybody's they're working from home. They're all over the place. They're trying to figure out what they're doing. Has that impacted the loan process at all?
I think it's been pretty good, actually. We were fortunate. It's always been a pretty digital company. And so the work from home aspect, we were able to make a very early call. We have a lot of folks who are in New York, which was kind of the early center of the outbreak for COVID. And so we got the whole company working from home basically in a day or two. And that part has been quite smooth. And we're a cloud-based company predominantly anyhow. And so that transition was pretty seamless. What was really fascinating though is as the pandemic took hold, our customer service call volume went through the roof.
Right.
And you're talking about call volumes, historic highs for us, 5 or 6 times normal levels. We were still able to assist customers on the first call about 86% of the time, even when the volumes were so much higher. And one of the cool things that we saw is actually our online review scores, like your Trustpilot and your Better Business Bureau type scores, not only held steady during this crisis, but some of the scores actually improved. So, it's a big deal for us. I mean, one of our differentiation points is our focus on the customer experience, and I think we were able to deliver that despite pretty high volumes and challenging circumstances.
Okay, so that's the impact that we've seen so far. What about on lending? What do you think all of this whole COVID thing, working from home, all the remote stuff, now that you've got customers that are doing it and doing it well, and they're borrowing from you and you're servicing them, where do you think all that's going to be going in the next few years?
Yeah, it's, one thing is for certain, the pandemic is going to accelerate the digital transition to lending product or digital lending, faster than it ever would have happened on its own. Right. You literally could not go into a bank branch during COVID without putting yourself at risk. And so we actually have a part of our business called ODX that sells technology to banks. And we saw increased demand from several major, lenders who weren't fully digital yet and want technology solutions to accelerate that. So I think that acceleration of digital on the lending side is huge. And I think for the lenders themselves, we've got to recognize that our customers are adapting. And they're having to innovate as much as we are in this environment. So the restaurant that relied on, dine in and formal dining has to adapt to outdoor dining and takeaway or delivery service. A hotel or a business conference center that made money one way, is clearly having to figure out how to make money a different way. So I think what it brings for the lenders, we have to then keep pace with them. We have to be able to underwrite hybrid online, offline businesses. We have to be able to underwrite businesses where they may have revenue sources from 3 or 4 different types of activities as opposed to just one. And I think what small business is, though, it's amazingly in the long run resilient. In the short run, there's going to be a lot of business failures this year, and that's just a fact, and it's very unfortunate. However, over the next few years, you're going to see new business types crop up. And you're going to see a lot of existing business models adapt to the new environment. And I think as lenders, we're going to have to move with them.
Noah Breslow is the CEO of OnDeck. Noah, great. Thank you for providing all the answers to my questions. I appreciate it very much. And I hope the audience will appreciate this as well. If you're watching this, hope you got some good information from this. My name is Gene Marks, and thanks for watching.